Hey everyone, welcome back to Corporate Decoder, the place where we spill the tea on corporate filings. And let me tell you, UPAY Incorporated just filed a report that is, well, it is a story for sure. Today we are diving deep into UPAY Incorporated's latest quarterly report and uncovering what is really going on behind those numbers. They are a company operating in software development and licensing, mostly in South Africa. Hang on to your hats because this one has got some interesting twists and turns. Don't forget to hit that subscribe button and join our Discord community linked in the description below to keep up with all our corporate deep dives. Alright, let's get straight to the heart of it, the financial statements. We were looking at their balance sheets up to the 31st of August 2025, and the numbers tell a story about their current situation. Total assets for UPAY Incorporated stood at about $173,165 on the 31st of August 2025. That is a pretty significant drop from over $234,000 in February of the same year. This decrease in assets suggests the company is either selling off holdings or its assets are simply losing value. Now let's talk liabilities, the money they owe. On the 31st of August 2025, their total liabilities were a whopping $834,010, a substantial jump from $703,005 at the end of February. This is a red flag for investors, as it means the company is taking on more debt or owes more money than it did just months before. And then there is the stockholders. Deficit, a fancy way of saying they have more liabilities than assets, meaning the owner's equity is negative. This deficit grew from nearly $469,000 in February to over $660,000 by August. This widening gap highlights the company's financial struggles. Looking at their income statement reveals more about their performance over the last few months. For the 3 months ending the 31st of August 2025, they reported a net loss of $117,252. This is better than the $191,324 loss from the same period last year. So that is a small win. But when we look at the 6-month period ending the 31st of August 2025, the net loss was $259,238. Still a loss, but it is an improvement from the $342,001 loss in the same 6 months of 2024. It seems like they are trying to cut down on losses, which is good, but they are still losing money. Their revenue numbers are also interesting. For the 3 months ending the 31st of August 2025, revenue was $188,947, up from $168,071 in the prior year. That is a good sign, showing some sales growth. However, for the 6-month period ending the 31st of August 2025, revenue came in at $359,361, which is actually down from $425,320 in 2024. So while they are seeing some short-term gains, the overall trend for the year so far shows a dip in sales. This inconsistency is something potential investors should definitely watch. Let us look at their accounts receivable. As of the 31st of August 2025, they had $41,222 outstanding. This means customers owe them this amount. While this number increased slightly from February, it is important to see how quickly they collect this money. A big chunk of their receivables were from just 2 customers, with one customer accounting for 42% of the total on the 31st of August 2025. That is a huge reliance on just one client. If that one customer stops buying, UPAY could face significant financial problems. Now, this is a really interesting part of the report. They owe a significant amount to related parties, meaning people or entities connected to the company, management or major shareholders. On the 31st of August 2025, this figure was a staggering $101,069. This includes a lot of individual promissory notes from people like the CEO and companies controlled by significant shareholders. It looks like the company is heavily financed by insiders, and it gets even more complex. They also have a substantial amount of notes payable to related parties, which are essentially loans. On the 31st of August 2025, this amount was $251,000, adding to the non-current notes payable to related parties of $220,000. This means a large portion of their debt is owed to people closely tied to the company, which can create conflicts of interest and raises questions about the terms of these loans. Looking at their stock information, we see common stock issuable. This represents shares that are promised but not yet issued. For the 31st of August 2025, this was $172,000 worth, up from $103,500 in February. This indicates promises of future share issuances, likely related to compensation or acquisitions. One of the most critical parts of any financial report for a company in this situation is the going concern note. UPAY Incorporated explicitly states, and I quote, "The company does not have sufficient revenues to execute its business plan. The company intends to fund operations through equity financing arrangements. There is no assurance that this will be successful. These factors, among others, raise substantial doubt about the company's ability to continue as a going concern." This is a very serious statement. It means the company's leadership itself is not sure if they can stay in business for the next year. They are relying heavily on getting more money from investors, and if they don't, they might have to shut down. Scroller revenues were concentrated among 2 customers. Scroll, the company, also highlights a major risk factor: customer concentration. They state that their revenues are concentrated among just 2 customers. For the 6 months ending the 31st of August, 2025, one customer represented 24% of their revenue and another 9%. This means a huge portion of their income comes from a very small number of clients, making them very vulnerable if just one of those clients decides to leave. Scroll whether our system will be adaptable to us needs. Scroll, the company, is also facing uncertainties about expanding into the US market. They explicitly list these as trends and uncertainties, including whether our system will be adaptable to us needs and whether we will develop interest in our software system in the US. This shows a significant question mark over their future growth strategy. Scroll disclosure controls and procedures. Scroll now let S turn to their internal controls and procedures, which are essentially the rules and checks they have in place to ensure their financial reporting is accurate. The report states, and I quote, "Our disclosure controls and procedures were not effective in providing reasonable assurance in the reliability of our report as of the end of the period covered by this report. This is because we have not sufficiently developed our segregation of duties and we do not have an audit committee." This is a serious concern. It means that the company's own management admits that their internal processes are not strong enough to guarantee accurate financial reporting. The lack of an audit committee is particularly worrying, as this committee is supposed to provide independent oversight of financial reporting. So, what is my take on UPAY Incorporated based on this report? Well, it is pretty clear they are in a precarious financial position. Their liabilities far outweigh their assets, they are consistently losing money, and their own management has stated serious doubts about their ability to continue as a going concern. The heavy reliance on related party financing and a concentrated customer base are significant risks. The internal control issues are also a major red flag for any investor. While they are showing some revenue growth in the short term and a decrease in net losses, these positive signs are overshadowed by the fundamental financial and operational challenges. Without a significant injection of new capital and a clear strategy to address their operational and control weaknesses, the future for UPAY Incorporated looks very uncertain. It is a classic case for us to keep a very close eye on, but with extreme caution. Alright, that is our breakdown of UPAY Incorporated.